Investments is it's a very personalized thing. So
Mm,
there cannot be a generic response as to where you should invest. It depends on each person's own requirements, what kind of risk profile they have, what are their life goals, what is it that they're trying to achieve with their investments.
mhm,
So taking all this into account, one would decide what kind of asset classes they can get into.
mm,
Because every asset class also comes with its own characteristics, like what is the kind of risk an asset class has, what kind of tenure you need to have, what kind of liquidity it has, what are the tax implications.
mm.
So we have to look at our requirements, we have to look at the asset classes characteristics, see what is aligned to your requirements, and work out a good mix of investments so that you're diversified across different asset classes.
Welcome to another episode of The Brand Called You, a vodcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. If you're new to our channel, please consider subscribing to it and hit the bell icon so that you never miss an update. I am your host, Ashutosh Garg, and today I'm delighted to welcome senior banker Vinita Idnani. Vinita, welcome to the show.
Thank you so much, Ashutosh. Pleasure
Uh,
being here.
Thank you. Vinita is the partner of Capital League, and before that, she spent many years with HSBC. So, Vinita, let's talk first about Capital League. But before that, what made you leave a senior role in HSBC and start off on your own?
So, okay, so let me put it this way, Ashutosh. I think I've always been fairly fortunate to have had that clarity about what I wanted to do in my life and, the kind of life I wanted to lead. And I love my job at HSBC.
Mhm.
But, howsoever important my professional life was to me, I always knew that it was a part of my life, just like my personal life was also a part of my life. And I wanted to strike a better balance. I wanted to do well professionally, but at the same time, also make space for things that were important to me in my personal space.
Hmm.
And I realized that no matter how well I managed my time, a corporate structure, it has its limitations.
Correct.
So I decided to move on to do something on my own. And looking back, it was obviously a very risky move,
Mhm.
leaving a job where I was doing very well, a well-based career. But when you're clear about what you want, you get the confidence and courage to act on it
Wonderful.
and to make it work. And I think it worked out pretty well for me.
Terrific. So, tell me about Capital League. What do you do here?
So, Capital League is an independent boutique wealth management firm that is run by an all women team, perhaps the first of its kind in the industry. We are a team of 17 women professionals with extensive experience in private banking and financial services across market cycles.
Mhm.
Our client profile typically consists of CEOs, CXOs, professionals, entrepreneurs, and we work largely as a family CFO to our clients.
Okay.
So, wealth management requires a holistic view and approach.
Mm.
It's a highly personalized process. It can't be done on a piecemeal basis.
Mm.
Each client who comes to us comes with his or her own very unique set of requirements, their circumstances, their preferences, their past experiences, their life goals. And as a family CFO, we help in assessing these requirements. We help in understanding their big picture, where they're coming from. We help in understanding, how best we can add value.
Mm.
And then we provide them solutions that are customized to their unique requirements.
Okay.
Our client to advisor ratio is the lowest in the industry, and that's been done by design so that we can focus and we can give that high level of attention that our client families require. Over the years, we have received many awards and accolades. We are six-time winner of the CNBC Best Financial Advisor Award, just to name one of them.
Wonderful. Congratulations.
But to my mind, the biggest achievement would be the trust that we've earned of our clients, the enduring relationships that we've established with them. Our average tenure of relationships is very high. With some clients, we go back 10, 15, 20 years.
Okay.
And it's really been a privilege to have been a part of their journey, to have partnered and been with them through their wealth creation journeys.
Terrific.
So that, in brief, is what Capital is all about.
Terrific. Terrific. So let me move on and ask you a question that seems to be at the top of every young individual's mind. Where should a young person who has just started off, or maybe 5-7 years into their work, where should they consider investing? Equities or mutual funds?
Investments is it's a very personalized thing. So there cannot be a generic response as to where you should invest. It depends on each person's own requirements, what kind of risk profile they have, what are their life goals, what is it that they're trying to achieve with their investments. So taking all this into account, one would decide what kind of asset classes they can get into. Because every asset class also comes with its own characteristics, what is the kind of risk an asset class has, what kind of tenure you need to have, what kind of liquidity it has, what are the tax implications. So we have to look at our requirements, we have to look at the asset classes characteristics, see what is aligned to your requirements, and work out a good mix of investments so that you're diversified across different asset classes, and that helps you reach your wealth goals, whether it is your wealth creation, preservation, whatever it may be.
Very interesting. So, your answer is an interesting segue to my next question, which is that, whenever I have dealt with people who are wealth managers, the focus is primarily on money. And I've often said that a wealth of an individual has, 4 different components. And I'm talking to someone of my age profile. There's money, of course. Then there's jewelry, and Indians do have a lot of jewelry. Then there's property, and the 4th is art. Why is it that every wealth manager only focuses on cash?
You're reminding me of the ABBA song, "Money, money, money, it's a rich man's world."
Correct.
So you're absolutely right. Our wealth is a combination of all our asset classes, physical, financial, movable, immovable, everything. Correct. And when we talk about money, we are essentially talking about our financial assets or liquid assets, what you have in your bank account, your FDs, your mutual funds that can be liquidated. And all of this we know is needed to create the liquidity to meet our foreseen and unforeseen expenses. Actually, traditionally, we have been investing more in physical assets. Traditionally, we've been investing in gold and real estate. And real estate across generations, if you also look back from your experience, people it's been a hot favorite amongst the generations before us. And of late, people have started realizing that real estates can also be very illiquid, and the rental yields have also come down. So, and as financial literacy is going up, financial awareness is going up, people are moving more towards the financial investments. You're saying that wealth managers focus on money and the financial investments, but although yes, you're right, in the last few years, the focus has grown. But as a country, our penetration to financial investments is very low compared to what, let's say a US or even other emerging markets have. Also, when we talk about wealth, a combination of our physical and financial assets, there's this important, it's a concept called asset rich and cash poor. So we see a lot of wealthy retired couples around us who have this large house, they have beautiful art, jewelry, all of that. But in spite of being, we'll call them wealthy, right? But in spite of having all of that, they are worried about meeting their day-to-day expenses because they don't have the cash flows coming in. And that's where the financial investments come in, to have that kind of liquidity. And it's always good to have a mix because, like I said before, every asset class comes with its own characteristics. Financial investments are very liquid in nature. Even if you have money in equity, within 3 days, you can just liquidate your entire portfolio and have it available to you. But if you have art or real estate and all of that, that's not possible with it.
I agree.
So a mix is important, I would say, and not focus on any one asset class.
Correct. Because, a lot of people have invested, and people of my vintage have invested in art, for example, and things are beginning to change now. The younger people don't want to buy houses, they don't want to buy art, so things are changing, of course, and they
So
also don't want to
younger
buy
people
jewelry.
actually, live in a world with very few boundaries.
Correct.
Their world has become small. They are mobile.
Yeah.
Today they can be working in Gurgaon. Tomorrow they can be in New York or Berlin or anywhere. They
Absolutely.
don't want to be stuck up with physical assets, whether it is property or art, even cars for that matter. They can just Uber out and go anywhere they want. Why do they want to be stuck?
Absolutely.
Generally speaking, most younger people don't want that.
Absolutely. So tell me again, this is a question for the thousands of people who will listen to our conversation. At what stage of my career should I start financial planning?
Ashutosh, sorry to break the news, you're very late. Financial planning has to be started right in the beginning. The earlier you start, the better it is. And I'll tell you why. A lot of people feel, obviously in the earlier years, our savings are very less. And we feel that, right now things are very simple. Why do I really need a financial plan? A financial plan is basically a roadmap. It gives us a direction. It structures our savings and investments. And, as in life, whenever we see we do something in a more structured way, we do that a little better than, having it random. Plus, the financial plan helps us in aligning our savings and our investments to a goal. And when your savings have an end use, of end purpose, you end up saving more, and you end up saving in a more disciplined way. So it doesn't really matter, even if you're starting early and you don't have much money or much investments to do, but the financial plan is getting you into the habit of investing, the discipline of investing. Okay. And that makes a very large impact on your wealth creation. And other than that, the earlier you start, which is actually the biggest benefit of starting early. Earlier you start, longer your investment tenure. And that's when you see the benefits, the magic, the wonder, the power of compounding. Compounding makes exponential, impact on our wealth creation. And we can experience that if we have a longish tenure. So you start early, you have some assets that are, growing at a high rate, so that your compounding is even more. And then you see the rewards of your journey.
Very interesting. And the converse of that question is the older people, the senior citizens. A lot of people, when they were younger, again, my vintage, interest rates used to be 18%, and people used to say, I'll be able to live well. And as you just said, there are a lot of senior citizens who got asset rich but cash poor. With declining interest rates, what happens to senior citizens? What should they be looking at in terms of investments?
Yeah, so that's a big concern for senior citizens, considering they're looking for regular incomes to be generated from their portfolio. Now, interest rates, or whether it is inflation or any other macroeconomic factors, they're not in our control. They're a function of so many different things. But what we can do is use a few strategies that will help us in insulating our portfolio from any of these changes, other than interest rates also. And the golden word here is diversification. Diversification across asset classes, diversification across various financial instruments within the asset class, and diversification across different maturities within those financial instruments that you pick. Okay. So I'll just quickly explain this. Sure. Typically, a senior citizen, I'm talking more from a retired investor's perspective, is looking to generate regular income. So it's good to diversify across asset classes so that you're creating multiple sources of income. So that you have something coming in from a FD, something from a tax-free bond, something from an RBI bond, something from annuity or rent, or an equity and debt mutual fund. So that way, at any point of time, if one asset class is not doing well, your whole portfolio doesn't get impacted.
Correct.
Secondly, when you're looking at an asset class, consider all options that are available within that asset class, especially when we are looking at things like fixed deposits and bonds and as such. We must take into account the impact of inflation as well as taxation. Okay. It's good to have a mix of investments. Some investments that have, let's say lesser tax, like debt funds, equity funds, they have lesser tax, or a tax-free bond. That helps in reducing the overall tax burden on the portfolio, that you're basically getting a little bit extra from each of these things that you're doing. Next, you must stagger your maturities of the investments that you have.
Mhm.
Choose different tenures, so something for 2 to 3 years, something for 5 years, 7 years, 10 years, and so on. What this does is, in fact, we call this a laddering technique in our financial parlance. And what it does is that you have different investments maturing at different points of time. So that helps you in mitigating your interest rate risk. If you don't have your entire portfolio maturing today,
Mhm.
you will not be that impacted by the declining interest rates at this point of time. Also, very important to choose long term investments. I know senior citizens are often averse to investments that are 10 years and above.
Correct.
But we are talking about creating a corpus that has to last us for 20, 30 years because, as we know, lifespans have gone up. And typically, after retirement, we need to provide for 20, 30 years of expenses, which is huge.
Mhm.
So, let's say you invested in a tax free bond 2, 3 years back, and this was a 15, 20-year bond, and that's at a high rate. That will continue as it is, and it will not impact the current situation, will not impact it.
Mhm.
And lastly, equities are a must to be held in a senior citizen portfolio. I know they are averse to risk, but we're talking about a 20, 30-year corpus.
Mhm.
And when you extend the tenure of your equity investments, let's say you take a 7-year, 10-year kind of a view, the volatility and risk subsides to a large extent.
Mhm.
And equity is a growth asset, it is liquid, and it is what that's going to give you that extra bit of return to make up for these declining interest rates. So one can use different combinations of these strategies based on one's own requirements
Mhm.
and basically try and insulate our portfolio.
Fantastic. Thank you. So now let's move on, Vinita, and talk about what you are doing in can support. Um, Tell me about the work you're doing and how you're supporting communities.
So I'll just give you a little background of it.
Correct.
So, community service has always been important to me.
Mhm.
And over the years, I've been involved in very many different initiatives, largely working with children.
Mhm.
So I started volunteering with a blind school first. I recorded the digital books over there. I assisted a teacher. And it's an experience I'll never forget because, the entire class, the students as well as the teacher, they were all visually impaired. But the way they went about their lives, the way they conducted themselves, with utmost dignity, with joy, with no signs of distress, that was really inspirational.
Okay.
Then I had an experience with a government primary school where I volunteered for a few years.
Mhm.
Now, typically, these children, they come from environments where they don't really get much attention or guidance from their families back home. Parents are too busy trying to make the two ends meet.
Mhm.
But children, being children, they are naturally curious, they are eager to learn. So, my role over there was about, bringing in some degree of holistic development
Mhm.
to inculcate some good habits, to impart some life skills, to essentially, ignite that spark of learning,
Mhm.
show them a direction. Made lots of young friends there. And then I started working with Cancer Support, which is an NGO that works with cancer patients. The Cancer Support is India's largest free palliative care provider.
Okay.
And at any point of time, their teams provide support to more than 2,500 families.
Wow. Mhm.
And they also run a daycare program where I volunteer. So, Delhi is a medical hub, and people from northern India, typically from villages, from small towns, they all come to Delhi for their treatment, especially for diseases like cancer.
Right.
And they go to AIMS and Safdarjung. And these are people who have barely any means to sustain themselves,
Mhm.
let alone the expensive treatment that something like cancer requires.
Mhm.
They live in very poor conditions in the vicinity of hospital. They don't have information relating to disease or how to go about the whole thing. There's a lot of physical and mental agony that they're going through. They have a disease, they don't know which way they're headed. So the daycare program where I volunteer, the purpose of that is to create a safe, a friendly, a loving, and a supportive environment
Mhm.
wherein these patients and their caregivers, they can come for a few hours, spend some time there. The volunteers and sort of become like their friends or their guides who they can talk to about anything, share their concerns with. There are a lot of activities that are planned, which basically focus on their healing, their relaxation,
Mm.
health, nutrition, generic information, what are the do's and don'ts of the disease, how to go about getting the
Mm.
government schemes that are there. So a lot of that kind of counseling, a lot
Mm.
of that work that goes in. I work a lot with the teenagers, and teenagers have their own concern about, their future,
Mhm.
because this is such a long disease
Correct.
that their education goes for a toss, and they're worried. And coming from where they're coming from, financial independence is extremely important. They want to
Right.
quickly start earning money. The good news here is that most of them recover,
Okay.
but then we help them with the rehabilitation, getting back to school, to college, just to get them on track so
Mm.
that they can lead a financially independent life. They can lead a life with dignity.
Mm.
So at Cancer Support, we actually work with lots of patients.
Fantastic.
A lot of these patients, given the way this disease is, many of them recover and many of them don't.
Mm.
And you know how it is said that you can't add days to anyone's life,
Correct.
but you can add life to their days.
Absolutely.
And that's what our effort at Cancer Support is.
Very nice. How nice. So, Vinita, I'm going to move now to the last segment of our conversation, which are some questions for you personally. Uh, for someone who's been a banker, who's in now wealth management, is doing a lot of work with the community, what are some of the core values you believe in?
Okay, so my core values would be honesty and integrity first. That's a non negotiable. Pride in my work. That's held me in good stead, wherever, professional or personal. And third would be empathy and compassion. I think it's good to look at the world sometimes with a different set of lens.
Very interesting. And a follow up question for that would be that from where you stand today in life, what does success mean to Vinita?
So success has meant different things at different points of time to me.
Mm.
Earlier years, it's I think more inward focused. It's more about personal accomplishments, how well you're doing in school, college, your job, how well the business is growing. Now of late, it's been more about empowering lives. It's more about adding value. It's more about making an impact, making a difference, be it in my professional or personal capacity.
Okay. And who or what inspires you to keep doing so much?
I think anything and everything.
Okay.
I believe if you have an open mind, there's actually tons of inspiration all around us. It doesn't really have to be something big. I mean, something big is inspirational for sure, but
Right.
sometimes, even a little gesture or a little action of someone can inspire you. So I get inspired a lot.
Okay, terrific. So, time for two more questions. My next question is on failure. And I've often said this that parents in India or South Asia, I'm a parent as well, don't teach children it's okay to fail. We're always taught come first, go to the head of the line, etc., etc. And that manifests itself in behavior patterns of the children. Yet we learn, we fail. My question to you is what have been your learnings from your mistakes?
So, I have not really had any major failures.
Wonderful.
I don't know if I should say I'm lucky or unlucky.
Yep.
I don't know. Because I think failure brings in a fantastic experience, if I may use the word fantastic, but it's a huge learning.
Mhm.
But definitely, I've had lots of learnings in life, and I'll share with you one of the learnings that I personally use a lot,
Mhm.
and that's about taking the leap of faith.
Okay.
Um, we are all passionate about things, we are all interested in things that matter to us, but we often end up postponing these things. We all lead busy lives, and we typically wait for that perfect moment when everything will be just right.
Mhm.
I feel life is happening around us right now. We don't know what's going to happen in the future. So if you're serious about something, don't overthink, don't overanalyze, just take that leap of faith.
Mhm.
And it's amazing how things fall in place just when you take that first crucial step towards it. So yeah, that's something I've used in my life many times.
Very interesting. And my last question, and this is for the thousands of people who will listen to our conversation. What would you advise a young individual who's starting off on her or his corporate journey?
So, first of all, I would say this is a fantastic time to be starting your journey because, as a country, India is working its way to become a $5 trillion economy. We are the fifth, sixth largest, we keep shuttling between the domestic economies in the world. We've made a global presence for ourselves. There is so much happening right now. There are plethora of opportunities to choose from. Go back to the earlier times when there was such limited things that one could do. Now it's so interesting about the way things are moving on. So just choose. I think choose what works best for you.
Mm,
We know ourselves the best.
mm,
We know what floats our boat the best.
mm,
Don't follow the herd mentality. Don't follow the stereotypes. Choose what works the best for you.
mm.
Do your best, and yeah, then enjoy the journey.
Wonderful. Vinita, thank you so much. It's been such a pleasure speaking to you.
Thank you so much, Ashutosh. Yeah.
Thank you so much for this incredible knowledge that you have given to me and to all our listeners on wealth management, capital league. And I wish you lots of success.
Thank you so much. It was really great being here and talking to you.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.